All right, I really didn't want to take any more trades today, but I'm looking at this shape over here in the hourly chart, and I'm trying to be patient and wait for setups. But that looks like a great setup. A cup with handle kind of formation, room to go to this trend line at least. It tested yesterday's high right here and came down and was supported by the moving averages, a 50% retracement of the first hour candle and a test of the 5-minute range. It bounced right off all that. So I'm hoping that it holds. But my stop loss is basically under this pivot for some of it and under this consolidation area for some of it. And we got the same distance for targets on that. Let's see if it works. I mean, the pattern's pretty good. It's a trend line breakout retest, consolidation, pintails, and momentum pushes above with the moving averages. Plus, everything's above the moving averages. So you could call this a moving average play too. Everything's above the moving averages. All of it's going in the same direction. The 5-minute, the 15, see, moving averages are all going in the same direction on the 15. And all the moving averages are going in the same direction with price extended above on the one side. On the 5-minute, 15, and the 60, and on the 1 minute. So it's got some potential to go up for us. Let's see what happens. I'm not going to lie. The hardest part about it is letting it hit you. Oh, it hit my target. I was just going to say the hardest part about this is letting it hit my target. And that shot up so quickly. It must have hit some stop losses. Okay, so now all we got is the one that's left, and hopefully it'll get up there to our target. That was amazing. Maybe I should go put this on break even now and be happy with that. It hasn't hit the highest target yet, but it hit the first target. It's really pushing up to my target. I'm grateful. Hopefully it'll work out. This is the first time I've done 2 targets and let it go, hit the first target. That line up there, however, is the pivot of yesterday, the high of yesterday. And it did cross over it, but it was rejected. So the high of today is way up here. And I guess I should draw those lines. And it's within the range of my target. So it's not unreasonable for it to hit my target. If it goes back up near the high of today and crosses over, it's almost there. Oh, that'd be great if it hit it. Oh, let it hit it, 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 let it hit it. Oh, let it hit it. Oh, shoot, it was so close. Well, one thing's for sure, we need to go to break even now with that. So we're going to put this on break even, and we're either going to break even on the back half or we're going to hit our target. It's almost there. It's almost there. It's almost there. Come on, hit it, hit it, hit it, hit it, hit it, hit it, hit it. I've got to make myself wait. The other option is to trail candle by candle here in case it comes slamming back down.
Order filled.
It hit my second target. This is a great breakthrough for me. I'm so grateful it hit my second target. Okay, let's review the reason why I took the trade. First of all, price is on the same side of all moving averages. So this could be labeled a moving average trade as well. It's on the bullish side of all my moving averages on the 1 minute, the 60 minute, the 5 minute, and the 15 minute. All right? It's on the bullish side on all my time charts. Okay? Then it was creating a cup with handle pattern. And you could call this a 2 try to sell consolidation. This is a good pattern I like. I could have entered in right here. I saw that, but it was lunchtime. I didn't trust it. Now it was getting into 1 o'clock over here. And we just took that trend line break off of this one. Trend line, the pattern's beautiful. Cup with handle. You could just see that it wants to go up. Consolidation near the high of the range. And we just went long and it hit both of our targets. Thank goodness. Here on this layout, it's easier to see that the price is on the bullish side of all the moving averages. We've got the 2-minute chart here. We've got the hourly chart over here. And we've got the 5-minute chart or 15-minute chart right here. We've got the 15, the 60, and the 5-minute chart on this layout. You can see they're all on the same side of the moving averages. So this is a bullish moving average pattern. And it's important to take a note that we had multiple trade setups taking place at once, which is really powerful. We have the moving average trade setup taking place where all the moving averages are going in the same direction and price is on the other side of them, and they're all agreeing. But we also have trend line patterns and double sell patterns, consolidation patterns trend line breaks, and all working at the same time. Let's take a look at that closer. Okay, so here on the lower time charts, we have a trend line break where it retests the trend line with a bunch of pintails and consolidates right here before pushing up, right? This is one of my patterns by itself. This is a pattern that I would trade with multiple times to sell, 2 times to sell, breaks the trend line, tests and consolidates, and then moves up higher. This pattern by itself is enough of a reason for me to take the trade. But in agreement, I just happened to look over and go, wait a minute, everything is on the same side of the moving averages, which is another one of my trade setups, a separate trade setup that happens to be harmonizing with this trend line setup. So that is very, very cool. That's something for me to meditate and think about. If I can get multiple setups to take place on higher time charts and lower time charts, and they all agree, that's a high probability trade. I could have had a much better return on my last and final trade, which was my best trade. When I hit my first target here, I was so happy. I closed everything, but looking at the 5-minute chart anyway, this resistance area right here in this box, once it broke over the top and started closing again, and there is no other resistance, really, for a long time. So all the way up here. So I need to pay attention to the next level of resistance. I was just excited that it finally hit my 2 targets in a row, that I didn't even really think beyond that. So hopefully with more experience, the more we experience this, the easier it will get and the more perceptive we will be about the broader and deeper and bigger environment. Something I want to make a note of when I'm struggling with looking at resistance that's in the way of a bullish move. If a price is above all the moving averages and it's going up, then I shouldn't be as concerned about hitting resistance as I would be in any other situation. Because when price is strong in a bullish pattern above all moving averages on the 60, it's different if things are going down and price is, below the moving averages on say the 15-minute chart, like it is over here, right? And then we're looking for bearish signals. That's okay. But when it reverses and things are over the moving averages again, then I shouldn't be as concerned about overhead resistance, because we have agreeing and harmonizing bullish forces that are going up, and the resistance may not be as reliable as you think. This is very helpful. After analyzing my first trade today, I was trying to figure out, what was the trade setup? And I'm trying to think, okay, what are my favorite trade setups, for these, my favorite trades? If I'm going to do a momentum trade or if I'm going to do a structure trade, my favorite trades are at support and resistance here. And my first trade setup was fading resistance. So I'm looking at, using 3 kinds of trade setups though at these levels. So at certain market structures, I'm going to make a trade. Well, where are the market structures? Well, high and low and close of previous day, the high of that day, the low of that day, and the close of that day. Pre-market structures are good too. The high and low of pre-market. The opening 5-minute range, I like to see if I can trade above or below or fade that, right? And the trade setups we use at these market structures are momentum plays, consolidation plays, and break and retest. And I'm thinking of my first trade today. Which trade setup was it? And if we look at it real quick again, we had to ask ourselves, what was this particular trade setup? Because I don't know how to fit it into any category. And I'm guessing that if I can't fit it into any category, then perhaps I shouldn't take it. So let's look at it right here again. Right here, we're looking at a breakdown as it hits into resistance area. It hits into a resistance area, and on this first candle, it closed into the resistance. And then on the second candle, it put in a wick, turned red, started to, on the third candle, which is where I entered, it started to come down below the resistance level. So what trade setup is that? I don't really know. I'm trying to figure out how to classify this. It's not a consolidation pattern. It's not a momentum play. I just got to figure out, if I can't classify this, if I can't classify, name, or categorize this kind of trade here, where it goes up into resistance in one candle, puts in a bearish candle on the second candle and starts to fall back out of resistance, and I get in on that trade using a very tight stop loss. If I can't name this trade setup, and if I can't categorize it into any setup at all, then do I really need to be taking this trade? Now, I'm going to pause this video and come back in just a moment to see if I can actually come up with a way of taking this trade. Okay, if I must take that kind of trade, here's what I'm going to call it. I'm going to have to call it a reverse bullish or bearish candles with a tight stop loss. And that's basically what this is. Let's go back and look at this. Okay, the candle comes back on a bearish candle coming back down out of resistance, and I used the high of this third candle. The stop loss was very tight, looking for it to come down and hit the target. Remember, it did hit the target, but it just barely ticked me out. It could have won. It could have been a 1-to-1 reward on it. Not that it's the best setup, but it could have gotten me something if I'm going to take that trade. But it's a more risky trade. It is a more risky trade. I have to understand that it's a risky trade. These bearish and bullish candle reverse patterns, you're really just counting on the one candle. You're really just counting on the momentum of this candle to take it down and hit a 1-on-1. As long as you can get that price to stay below the high of that candle development, because that's what it was. I entered in on that candle using that live candle. The candle didn't even close yet. This candle closed. The next candle put in a little wick and started heading down. And I said, as long as it keeps going down, we'll be good. But it barely popped up, stopped me out, and then went down. So that was the problem on that trade. It's a higher risk trade, but I did want to classify it. And I don't need to be taking trades that I can't name. If I don't know what category or what trade setup it belongs to, and I'm just taking a trade because I just want to try something, then I need to cut that kind of trading out. And the whole purpose of me making this part of the video is that I understand that I cannot be taking trades that I cannot name or they're not written down in my playbook. And now that it's written down in my playbook, I have the right to take it, but I also know now that it's more risky. And the question is, do I really want to take higher risk trades? But I will keep it in my playbook for now.